Something massive just changed behind the scenes, and it's starting to quietly reshape the entire market. We saw a surge of fresh liquidity flooding in from China and Japan, easing fears of global slowdown. And at the exact same time, Washington's heated trade war rhetoric took a sharp and sudden turn towards compromise, guys, and whispers of lower tariffs have investors breathing again. Meanwhile, the world's biggest financial players are quietly repositioning because they know what this means, bracing for the next move. But here's the most crucial part. Bitcoin just broke a technical downtrend that it's held for months. And one major investment bank now says it could hit $200,000 by the end of 2025 this next year. So while this sounds very bold, but when you follow the flows, the policy shifts, and the quiet moves from institutional players that basically affect and move the whole market, the picture starts to get a lot clearer. Bitcoin is starting to decouple or separate from tech stocks and move like gold, a digital safe haven for the new cycle, for the new world. This subtle yet powerful shift signals the market is preparing for a major move, guys. One most people don't notice and won't notice until it's too late. So I hope you're paying close attention, because over the next few minutes, I'm gonna break down exactly what's unfolding, why it matters, and how you too can position yourself to stay ahead of the herd, ahead of the crowd, and make sure you take care of your family and your financial future. If staying ahead of major market shifts like this matters to you, I'd ask you hit the subscribe button and the bell notification so you know when my videos come out and you don't miss out. So we see a new chart of global M2 money supply, which basically means every dollar, euro, yuan, and yen sitting in pockets or bank accounts. And this M2 money supply shows the money pile is turning up. And when that line rises, Bitcoin and tech stocks tend to follow side by side. China's central bank is adding fuel. Since December, it has injected about 3.2 trillion yuan, which is roughly $440 billion, and even switched its stance or its position from prudent, which means conservative, to moderately loose, meaning they're more risk adverse. And we know more cash in the pipes means cheaper loans, often stronger asset prices, across the Sea of Japan. The dollar keeps climbing against the yen. When this happens, Japanese funds soak up US treasuries. It works like quiet money printing. Dollars pour in, bond yields ease, and markets have swung back to pricing for Fed rate cuts for 2025, meaning the market now believes the Fed is going to be cutting rates because the other conditions have been provided for. So why should we care? History says that when global money supply expands, when there's more global money supply because everyone's printing more currency, when this happens, just think back to the 2020 stimulus run, when everyone got stimulus checks, remember? Stocks and Bitcoin rallied together, they pumped up together. More cash chasing the same number of assets pushes prices up because then there's less supply. You can see already the side effect. After a rocky year, Bitcoin is only 17%. It's all-time high, okay? This is an incredible show of strength most assets would envy. And just as that tide builds, the tone in Washington is cooling down. The Treasury Secretary calls the 145% tariff on China unsustainable, hinting they'll ease it soon. Minutes later, he insists the goal is not to decouple the two economies. It's not to break them apart, because basically that would create two sandboxes of economies, right? That's not the goal, which is basically the code in many ways of saying the markets are too intertwined to cut ties. Meanwhile, the White House is sketching okay? Quick trade frameworks with Japan and India. They aren't full deals, but they're enough to settle nerves in the market. The president leaned in, promising tariffs on China will come down substantially and rolling out a string of friendly lines towards Beijing. He had positive comments to say. And markets love the olive branch, which is what you extend when you're trying to make peace, right? All while politics are softening, the central bank subplot stays hot. A big investment bank warns that pressures on the Federal Reserve is driving some money into Bitcoin, a decentralized hedge, and it even floats a $200,000 target for late 2025. And shortly after, the president says,
not good. I don't want to talk about that because I have no intention of firing.
He has no intention of firing Fed Chair Jerome Powell, removing the loudest risk to U.S. monetary policy. Stocks are cheering the shift, and major U.S. indexes finished more than 2% higher. Debt markets tell a cautious side of the story, though. Foreign holders yank about $200 billion from U.S. corporate bond funds, the biggest exit since 2020. And at the same time, Berkshire Hathaway keeps stacking short-term treasury bills, now holding roughly 4.6% of the entire treasury bill market, a giant cash cushion while bigger trends play out. And tariff relief, well, steadier Fed optics, or the appearance of steadier Fed policies, and big money hiding cash all point one way. Assets that thrive on fresh liquidity just got a clearer runway. And Bitcoin is already moving. Late in the session, Coinbase prices trade above other exchanges. One sign that real US buyers are stepping in. Market desks expect a flood of ETF inflows to show up in tomorrow's data and whisper about another big corporate buy next week. So keep your eyes peeled for that. And charts are confirming the shift. Bitcoin broke its 2-month downtrend, as I was saying a moment ago, and closes above the cloud and snaps a broader channel that's capped price since March. Even intraday, Bitcoin pushed higher while the S&P 500 stalled. Short-term charts show the two lines drifting apart. A long-term chart highlight a growing split from the Nasdaq, exactly what you would expect if Bitcoin is morphing into a digital version of gold. And traditional outlets are catching on. A Bloomberg headline simply calls Bitcoin a safe haven. The same badge gold has worn for decades. That digital gold angle has room to run. Bitcoin's market cap is still far smaller than gold's, leaving plenty of upside in the safe haven story sticks. And remember, despite every scare this year, Bitcoin is only 17% its all-time high. Plenty of investors are still waiting on the sidelines to see if prices will keep grinding up, and they could end up chasing this moment. We know we don't wait for Bitcoin to be we don't wait to buy Bitcoin. We buy Bitcoin because we know fundamentally its value is going to go up, up, up. It's the new digital gold, and it's even more valuable than gold. So right now, global liquidity is rising. Trade fears are easing, and Bitcoin is quietly pulling away from tech stocks, stepping into its own new role as digital gold. And the smartest players in finance are already moving into place, quietly stacking assets as the market prepares for its next powerful move. But we know this window won't stay open forever. The shift we discussed today is just getting started. And those who spot these early clues always hold the biggest advantage. So if you found value here and want to keep your fingers on the pulse, on the very pulse of where money is moving next, well, stay tuned. I'll see you in my next video, and subscribe so you do not miss my next video. Catch you guys tomorrow, guys. Bye.